Hey, welcome back. Final hour session just after 3 p.m. Monday the 18th. Pretty slow week as far as economic news. We Jackson Hole on Thursday, Friday. Curious to see what the market's going to do with that. Whether or not there's some drama around the Fed, what's being said. We have FOMC minutes on Wednesday at 2 p.m. Powell's due to speak, I believe, Friday morning. I wanted to take a look. I've got some trades running into the close today. I'll get those organized on my platform. I'm just going to kind of sprinkle it in through the afternoon. Hopefully, I'm going to get a bit of a pin price today between either 64.20, 64.30, 64.40, 64.50, or 64.65. I went a little nuts, but I was just kind of sprinkling in the pin trap. So I wanted to actually talk about this strategy today. Low risk iron fly. It's just a fancy name for an iron butterfly, where basically you sell the body or you sell the strike price you think that price can kind of pin at, and then you buy the wings. So I'm doing what's a little bit more of like it's a very low risk, high reward strategy, but I do have to get things pretty accurate within about 10 points. So I'll explain that. I'll actually create my trade in option strat so you can see the views of it. But let's go option strat. And I'm going to see if I can build out literally all these trades. I've got the 6450 as well, and I'll show this. So we're sitting right now with a pretty calm market this afternoon, and let's get this thing built out. So 64.49 is great. The positions that I'm in right here turned a nice little green profit on the day. That's fine. I do have some expirations to tend to. Come here, bro. Expirations for this week. That's my SPX I'll talk about here in a moment. I do have some covered calls on Intel, Snapchat. Let's see, Jazz is a pinch point trade. I'll be watching that one. MES is a hedge out to October. Things to get pretty interesting here. That's not super pressing. I need to go all charts. Okay. There we go. So MicroStrategy covered calls this week at 390. So 310 are in the money. 400 390s are out of the money. I've got about 92% of those covered call profits paying. So I'll probably just leave it and then just roll it again. MicroStrategy is a pretty high premium. Maybe go 1 or 2 weeks on that. What else? Tesla this week for some rolled covered calls. 345s, 280s, 260s, 250s. We're trading at 336 on Tesla, so getting some nice covered call premium and rolls. NASDAQ, I'm looking for my nearest expiration. Collar trade August 29th, 536. We're trading way above that, so I'm just going to start rolling calls on this covered call. I'll just start rolling this. Buffer trade, I took that last week. Hedges and ratio spreads, that's out for a bit lower. Okay. And what else? SPY, shares, covered. I'll just keep rolling those out. I think that's it. This one, I'll roll this as well. I think that's the only 2 I have in August, which is out not this week, but next week. So that's out 11 days. Okay, so my most pressing expirations, today's iron flies on SPX, MicroStrategy this week, Tesla this week. And then next week, I've got Qs and SPYs for some rolls. And we'll see. NVIDIA rolls, IWM rolls, Intel rolls. Intel's at 23.79. I've got covered calls at 21.50. Snap is rolls. UNG is a diagonal spread. Walmart rolls. So next week is going to be busy. I've got a lot of these trades expiring next week. So this list extending there. So I need to keep an eye on those for next week, which is no big deal. Should be pretty light maintenance. I'm about to get cooked on UJ. Is that dollar yen? What's happening? And what'd you do? Dollar yen. Let's go to currency strength. Yen is weaker. Dollar is stronger. Were you shorting dollar yen? What are you doing? So Adrian, tell me what you're doing. Dollar yen, currency wise, I just think that this is going to be a range bound currency, probably just continuing to be pretty noisy. Bigger structure to me would be, I would be way more interested. Excuse me. I'd be way more interested in a big fat pattern trade. So if I zoom out, something like this, I mean, either we clearly break this neckline below 140 or we end up having this channel and range where this just spends all the time with this kind of positive carry environment. One thing you got to be mindful of is the fact that if the Fed's cutting in September and October and December on the curve, right? On the curve, as far as interest rates going positive or going negative, right now, Bank of Japan is the only bank that is raising rates. Okay. So the JPY is the only central bank that's gone from negative to 0 to now positive 0.5%. So the JPY is at positive 0.5. Look, the dollar's still in at 4.25, 4.5, but they're going to cut, probably getting us down to like mid threes, low threes by end of 2026. Is this entire notion of the carry trade unraveling? Maybe. I mean, that's one thing we have to be mindful of. Nobody's been talking about the Japanese yen in 2025. It was certainly a big story in 2024 because it almost broke the market in the summer. But if we start to see that this carry trade is unraveling, I mean, this area to me is a sell trade. A break of 140 is a big sell trade. This would be a big risk-off unraveling if we see it. Or I should say, yeah, I mean, it would be a risk-off tone. It'd be a big unraveling of like leverage and positive swap and carry and all these things that the markets have been suppressed volatility for a while because of it. So your short 146 stops break even. I mean, break even's fine, dude. I mean, honestly, if you're trading the yen, you get break even. It could be worse. So I wouldn't feel too bad about that. It's frustrating to take the trade and not get the payout, but no risk on the trade is also a lot better than getting busted up on the yens, which can easily happen if you're not careful. Okay, so let's see here. All right, so that's a little yen action. Let's go top down, tail of the tape. We got 48 minutes for the close. I've got some box levels here that as long as I'm finishing inside this yellow zone, ideally the middle. So if I'm going to make this a little bit larger line. So if I'm in the middle of this line here, go a little bit larger. So middle of this line, middle of this, I guess this box. So middle of the boxes, these are my profit traps. So if price today at 4 p.m. or close to it is sitting in the middle of these, this is a 45 pin. This would be a 50 pin, a 40 pin, a 30 pin, and a 20 pin. If we're anywhere close to those, then I'm looking at potentially a $500 profit. So as close to these zeros that I can get would be ideal. We do have a low here around 40. We do have a nice gamma level, liquidity level at 50 that I've been watching for the day. So I started out initially like, okay, can I just place a trade here at 50, place a trade here at 30? Well, then as I sprinkled those in, it's like I'm only risking like $35 per trade. It's like $35 to $40 risk. I'm like, well, I'll sprinkle in one here as well and here as well and see if I can get this area pinned. If price finds a way to go higher for the day, I'll pin this one as well. So my total risk is about $40. 1, 2, 3, 4, 5. I've already made about $100 on the day, $140 on the day, and so I'm risking about $150 on these trades. So I'm trying to go after like a profit trap of maybe anywhere between $100 to $500 to hopefully add to my bottom line today. Miners correlate to commodities exactly? Definitely not exactly. Miners have had if anybody's been like the value space or like gold miners, silver miners, junior miners, it's probably been like one of the most underperforming components of your portfolio for years and years and years. And all of a sudden now it's exciting. So case in point, I hear a lot of talk on GDX. Okay, GDX are gold miners from the stock year to date. Okay, this thing's had a great year. Now let's compare this to gold. Okay, gold miners. This is just one ticker, by the way. This is GDX. So open here around 34, up to around 57. It's up 68% year to date. Okay, S&P is up 10%. NASDAQ's up 10%. Dow and Russell are kind of treading water. I mean, they're still up, but they're up single digits. Individual stocks, obviously, from the bounce in April, you see some stocks that are up over 100%. So the difference is we didn't have a 20 to 30% pullback on gold miners. We just had a rip higher. Now compare this to gold. Okay, go GDX versus, so up 68%. Go to GLD. GLD for the year is up 20+%, 25%. So miners have outpaced by almost 3x. Do I want to chase miners? I mean, not really. I mean, if the premiums were better, I would freaking sell puts on them. But if I traded GDX on a daily or weekly, it's like, what do I do with this? Okay. I see this as like a ripe opportunity, but I'm not going to buy these highs. If we get a pullback to any of these moving averages, then sure. Maybe I can sell some puts. Let me see. I'm just going to look out now and see if these are, how volatile is GDX? GDX trading for about 25 IV rank. I'm probably not going to get a lot of premium for this, but if I go out to the end of the year, GDX around like maybe $50, maybe 50 and 45. I don't think the premium is going to be that great. So 50 and 45, I'm going to get $1.84 on willingness to own 200 shares. It's not a bad allocation. If you want the gold exposure, the silver exposure, miners have been outpacing. I don't know. Honestly, I almost like the spot price of gold better because I just think we're going to consolidate more. Maybe miners catch up. They have these long stretches where they just don't perform well. It's impressive that they're up 68%. They've outpaced gold. They're beating the pants off the markets right now. Great. Do I want to chase them at these all-time highs no, I don't. Selling a 50 put, selling a 45 put, grabbing a $1.85 with an 80% chance of profit is pretty good. Now, obviously, I'd be willing to take on some assignment risk. I've got about a 20% chance that I would get assigned on this. Maybe what I look at is if this pulls back, and naturally, when we have something that's up 60+%, we've had pullbacks that are much deeper. This is a 25% correction, right? During this pullback here, that is a 16% correction. This little pause window, while gold has been sideways, this thing, pulled back 8%, but it's still managing to go to all-time highs again. So I do think it's in the part of a good trend. If I were just looking at the technicals, this low to this high, I'm just going to measure this thing because we might be hitting some symmetry where this market's going to pause or pull back. So if I box this in, take this low from COVID, swing it up here, all this has been is a low to a high, and all of this has been a correction. So this is wave 1, all this is wave 2. If this is a wave 3, a little pause and pullback wave 4 to a wave 5, there's still upside potential here. So I don't mind the trade, right? If we pull back to this level, as long as I'm not taking on a ton of assignment, but we still go higher, I like the trade, right? If you get assigned, could you assign it or could you sell it immediately? For sure, you totally can. But if you're getting assigned, most likely the price of the underlying is going to be below your sell put. So if you just jump in and sell it, let's say you have a nasty gap lower, you get assigned. Well, I wouldn't necessarily want to just sell it immediately for a loss. It's like, let me look at the price. Let me look at the break even. Could I sell a covered call? Could I repair the trade? And honestly, if I took profit, well, if I got assigned, let me do the math here. If I did this trade for 50 by 45, okay, I'm willing to take 200 shares. My break even's 47.50. I still collect $1.84. I can still take about another 90 cents off this trade. So 47.50 minus 90, about 92 cents. I own the shares at 46.58. What's interesting is this high is around $46. Okay. Now, before I just jump in and take this trade, if I went out 30 days and I have an at the money trade, I'm only going to decrease my cost by maybe $1.5 to $2.5. So I've got to be okay with shares. If I own shares at 46, if I sell a covered call, I'm only going to get probably $1.5 to $2.5 on this trade to sell something at the money. So I think the better trade is if I'm going to sell puts, my intention is I want to sell this for a higher premium and not just take it for the current $1.84. Because if we dip it all, give me $2.50, give me $3, give me a slightly better profit trap and let some volatility come into this. I still think we have a bit of a correction. If this is a wave 3 that's completed, a sideways move, maybe a wave 4 to 5 still has upside potential. Okay. So I'm going to do this. I like this trade. I'm going to try to get this trade for $2.50 pending. So I'm going to sell the 50 put, sell the 45, put this pending at 250. That way, if there's any jump in volatility or any dip in gold, that maybe this thing spikes up to 250, gets me filled. The math in that trade would work out similar. 47.50 minus $1.25. I'd own shares at 46.25. I think that's repairable. And I might not take any risk of assignment because we might just pause and go up. So I'll put this trade in. I'm going to use this for my margin accounts. It's not setting me back a ton. But if I took 200 shares with a break even of 46.25, that'd be about $9,200 cash. So I'm in a margin account, probably 1/3 of that. Cash accounts, I still have some, but I've got enough exposure on GLD, SLV, CENF, or CEF. Yeah, CEF is a gold and silver ETF, as well as PHYS. So I've got 4 tickers that I'm playing on gold and silver right now. I also have Bitcoin. So I'm not looking to take on a bunch more, but miners, I don't have any exposure in the miners. I'm looking to see maybe if I can, get some of that that extra growth that miners have produced this year as far as year-to-date returns. Okay. Thank you for that, William. I appreciate that. So I'm going to take this trade pending order 250. And this is going to be on my portfolio margin account. So 1, 2, 3, 4, 5, 6, 7, 8, 9. These are all margin accounts. Yes. Okay. So if I do get those filled at 250, that's 3, 4, 5, 6, 7, 8, 9. So that's 9 at 250 times 9. So 2250 on just some income. We'll see. And if it doesn't fill, it doesn't fill. But I'm not going to settle for the trade right now when we're sitting at highs. I think we have a bit of a pullback or maybe some risk off trading. But I could be wrong and this thing just keeps going higher. But I don't like the technicals looking at this and saying, like, I'm going to sell some puts right up here at these crazy highs. My favorite time to sell puts is when the market is dipping, right? When the market's dipping and volatility for that asset goes a little bit higher, I want to sell some puts. So I'm looking at positioning for those puts, but trying to get a little bit more premium. So try to sell this for 250. If it fills higher, awesome, but it won't fill less than 250. So I'll put this in as a pending order and see if this ultimately ends up getting filled. Okay, and I want to talk about some iron flies for the close of the day. So that's 4. 5. 'Kay, a couple more. All right, this should match for everything. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 5, 6, 7, 8, 9, 10. Yep. So that's good. All right, let me get this in my tracker. There it is. Okay, so this is GDX. That's out to January 16th. So if assigned, price would have to be below $50 and below $45. Willing to own 200 shares. And that break even would be, let's see here, 47.50 would be my break even on 200 shares minus a split of the credit. So that'd be $1.25. I own shares at 46.25. And that's awaiting fourth wave, potential trend bounce for fifth wave completion or up. So we can still go higher. Let's see here. How different do you trade because of Trump? I mean, I don't know. I mean, honestly, like, Trump this year made things a little bit more cautious, and I was certainly a little bit more hedged going into the first quarter. So, I mean, I was able to time that like February, March, April correction pretty well. I just thought it was silly how we rolled out this whole trade war plan. I think it was a huge shock to the market that I thought was a little bit self-inflicted and probably unnecessary as far as the messaging. But that's also what made it like crazy effective. It's like it just grabbed the whole world's attention, and all of a sudden everyone's like, hey, let's deal with the US. If the US is serious, let's figure out how to trade with them. But it was really disruptive, you know. So but it, honestly, more than anything, and I've said this many, many times, it's like it's just a bunch of noise. Like I've made more trades this year that's just being technical, just being systematic, and the markets have certainly adapted a lot quicker to Trump than they have like through March and April. They were really shocked. This went from like very pro growth administration into like the market was just like, oh my gosh, we got a freaking global trade war now, we got a systemic risk now, and then the market figured out like, all right, I guess we don't. So that was the weird part, was how kind of disruptive that whole window was for the first 30 45 days of like March to April, that like expiration cycle, Q1 to Q2. Very different landscape. Q1 finished with a terrible fall. Like end of March was near the lows. We obviously broke fresh lows into early April, Liberation Day. You had the April 7th bottom, and then you had all sorts of weird insider stuff, which is like good time to buy. Market rips up 9% in a day, like crazy volatility. So it's just noise, it's like, and you got to trade through it. I was telling traders this morning in one of my masterclass or my live trading session for Waterfall Income. Look, I've got a strategy that we're talking about this week in a masterclass. My Waterfall Income service here. We trade this thing every Monday. Like, come rain or shine, like we're showing up to trade every Monday. Okay, daily profit play, rain or shine, we're coming to trade every week, every day. But this trade through the last, I have option data that I'll show this week in my master classes. Go back 12 years. And 12 years was not just, oh, that's easy, that's just a bull market since the bottom in 2009. No, it's not. 2015 to 16 was a sideways 20% range peak to trough. Like literally for 2 years, it was an up and down range for 20%. So certainly not a bull market. 2017 was every month in 2017 was like a low fraction 1% grind. The market finished higher for the year, but it was like super low volatility. 2018, we had a 20% correction. Market bottomed out with the Fed pivoting hard in 2019. We had a 20% correction in 2019. We had a COVID crash in 2020. We had a bear market for 9 months in 2022. We had a 10% correction in 2024. We had a 20% correction in 2025. We saw 7 20+% corrections in the last 12 years. And this strategy still wins about 97% of those trades. So it's a phenomenon in the markets, which is this ability to be resilient. Takes advantage of that. We use options instead of just fully allocating our positions of buying and holding. But anyway, it's like it's a fun way to think about, a way to like kind of actively invest as far as like retirement income. This is one of my favorite retirement strategies, and I do it every week. It's pretty low maintenance. If this is the only strategy I did, I would show up and trade every Monday, and I wouldn't look at my charts until the next Monday. So it's pretty straightforward. Right. So anyway, it's going to be a fun strategy to talk about. I always like, discussing waterfall income, get new traders on board to see how straightforward it is. And, we have a trade that we built out today. We took a live trade. There's a 98% chance profit on the trade. We've been averaging 93% winners since the service started. That's over a year ago. Go back 12 years, the service wins, 97%. It's not, and it's all defined risk, by the way. It's not naked options. It's not something that's going to get you stuck if the market's down 5-10%, you're like, oh man, that's a lot of risk. Now it's risk defined. The market could, drop 30%. We'd still take managed risk. So the black swan event has increased. Yeah, maybe. But that's the thing, is like, you can't call it a black swan. It's like nobody knows what it is. I think this year the market spent so much time trying to figure out what the next black swan is, that it's like, that's why it hasn't done anything. We haven't had a black swan. I think you could list the things like, okay, well, does the U.S. labor market break? Does the U.S. housing market break? What about the Fed? What about Trump? What about if we replace Powell and he leaves early? What if he resigns? What about a shadow Fed? What about this? What if, right? Can't trade that. Like, I can hedge, I can manage risk, but I can't just stop trading for like this fear of like, what if if the market goes down, I want to buy the dip. If the market drops 10%, I'm buying the dip. If the market drops 20%, I'm buying the dip. I'm going to stay invested. If the market's down 50%, I'm going to buy the dip. It's like, can I survive the downside? And that's why I hedge with futures. That's why I hedge with, really cheap trades that cost me less than 1% that pay me, 10 to 20x. Because it's not easy. The market's down 20%. If I can have a drawdown like this year, the 20% dip I saw in April, like my accounts were down about 6%. And they were open positions. I didn't realize those losses. It's like, but I was down about 6% open that came back. And then on top of that, I was actively trading through it. So it was a nice little resilient recovery for me. But the goal is, protect some downside and know that there's inevitably going to be downside. I just think that this market is built on so many mechanisms to keep trying to grind this thing higher, that if you look at where we are at right now, it's like, I'll just ask you a really simple question. By the end of the year, is this market going to be higher or lower than right now? Do you think that we have peaked in July of 2025 and this is as high as we go for the year? I mean, what else is out there on the table that's like really disruptive for the rest of 2025? I mean, the noise between Powell and Trump and the Fed and who's going to be the next Fed chair. Right now, transparently, the Fed's probably going to cut rates in September, possibly again October, December. We will see. But I don't see that really slowing the fiscal monster. Like the fiscal monster is spending tons of money and trying to grow. And the fiscal monster, government spending, is trying to see a Fed that's going to be a bit more accommodative to allow the U.S. economy to grow and grow faster. Because if we're growing at 3% or 4%, and even if we have inflation at 2 to 3%, we can still have real GDP growth, right? But if we're growing at 1% with inflation at 2 to 3%, we're not going to grow. So it's been interesting how like I was kind of, Team Powell coming into this year with like stickier inflation. But now I see that if we don't see the Fed cutting, then I can see us like stalling too much. I can see the economy stalling too much and rolling over. And I think if the market has to adjust earnings expectations, that's when we're going to see like another decent haircut in the markets. I still think the market gets bought on dip. I still think that price to earnings wise is not terribly overvalued, considering what type of profit margins some of the best companies in the world do have. But it's never like different. Everyone says like, oh, it's different this time. It's not. I mean, whatever plays out over these next 6 to 12 months is probably the same playbook you could see that rhymes with, late 90s, rhymes with early 2000s, rhymes with, maybe 2007, 2008, maybe. Probably rhymes a lot with what COVID's price action seemed to be these last 5 years, But it's just different. Like things are different, things are faster. And at the end of the day, it's like, how well do you manage risk? That's really the most important thing. How well do you manage risk? If you manage risk well, you're probably in good shape. If you manage risk poorly, you're going to struggle. Because when the market does something silly like have its little 5 or 10% hissy fit, you're going to lose money. You're going to be in a big drawdown. You're going to have to evaluate like, are these good trades? Should I dump positions? What about all my risk? But if you take risk up front, this is why I like options so much. When I trade options, I just trade against price and time. I have it defined risk, so I can't lose more than what I put into the trade. A lot of that's always under 1%, and it does make life a lot easier. Okay. All right. Let's see here. If someone has never traded options before, could they start the waterfall income strategy? Lee, I'll say this. If you want to start with practical options, which one are you talking about? Practical options like quick guide at $27. You can't go wrong with that one price point wise. For $27, jump in and digest it. You get the gist of practical options for the quick options strategy, which is it's a bull put spread, bull put spread and a bull call spread. It's anyway debits and credit spreads, right? It's pretty simple stuff. After you go through the material, it makes a lot of sense. It's really, if I place this trade, what does it mean? Where's my risk? Where's my reward? You get the concept of that, and you're starting to apply that. Waterfall income in my services here, if I could say, what would be my favorite way to have people get involved in anything that I teach? And again, like I'm not, this wasn't like a planned conversation, but waterfall income would be like my number one service for like the simplest way to get started with me. And I say that because it's a very clean trade and concept with a crazy high win rate and a lot of forgiveness, and you can trade it passively, right? So one thing that gets a little traders like, hey, I trade every day. What about pattern day trading? Well, some traders can't trade every day. If you got less than 25K margin for right now until pattern day trading goes away, you're going to only trade 2 or 3 times a week. So daily profit play sometimes isn't for everybody, even though you can have this account here and this account here, totally different brokers, and they can trade. You can trade 5 times a week. But waterfall income would be probably the simplest strategy. It's 2 core strategies that I give myself a lot of flexibility. Okay. Daily profit play, I'd say, is my second favorite because I'm going to grind in the markets every single day for some income. Okay. News breakers, double ups, I would put these kind of together. As far as reward to risk, I like double ups a bit more than newsbreakers, although they both pay very well. They both have like, newsbreakers is more in line with like a 1-to-1 oftentimes, and I'll take partial profits for higher probabilities. Double ups is just pure high reward, low risk. And we just had a masterclass in that last week. Pinch point, pinch points, the alert service is a bonus, but the scanner itself, I've got traders that absolutely love the scanner because what you're doing is you have a volatility expansion. So this one I would kind of put on its own little island of like, if you like being spoon-fed great trades with a probability of direction, Pinch Point is a fantastic scanner. It's just a website we host with real-time data, and you can jump in and find 10 stocks a week that are like ready to move in the next 30 to 60 days. That's what I built it for. Crash insurance is how to hedge. Project options edge is my most advanced. That's why I put this one intentionally at the bottom, because if you get a little bit of the education here, you can kind of build it up to understand this is kind of the kitchen sink. This is where we do a little bit of everything. Okay. So, waterfall income, to Lee's question, probably the simplest and easiest strategy for me to teach, and also the least amount of maintenance. I literally take a trade on Mondays and I just spot check it every Monday for the next class. Like very rarely am I managing the trades. Like we got to pay close attention to this one. We really don't. It's usually I'm in high percentage of profit or high probability of profit, and I'll see you next week for class. Like our classes are usually 30 minutes long, if that. And we just talk shop a little bit where I'm at. Am I positioning for something more forgiving, more at the money? And we just detail the trades. So anyway, however, you are interested in maybe helping me trade for you or trade with you, then just let me know. So feel free to ask all the questions. This is great education. This is the kitchen sink. This is probably my simplest way to get started with options. This is my best way to grind with me every single day. These two trades, like I said, high reward to low risk. Newsbreakers needs a little bit more of a catalyst. Double ups just focus on indexes. Pinch point, awesome volatility plays in a ton of stocks. I've taken symbols that I've never traded in my life. Over 20 years, I've never traded some of these symbols, and they just get spoon fed to me every single week. So I save this. We do a watch list Wednesday where I take a look at my pinch point scanner, see what stocks are on the watch list, and if I can find a couple of trades, I sprinkle them in on Wednesdays. Crash insurance, I think for the cost, it's a $197 course. That is learn how to protect your portfolio. If the market's down 10% and I could avoid like, let's say 6 or 7% of that crash, or I could avoid 80, 90% of the drawdown, I'd be a much happier trader if I'm there, right? Market drops 20%, I'm only down 5%. That's a big difference to my bottom line. That way we can weather the storms in these nasty bear market, spin-offs, or these nasty bear market moves. Think about what it is like being a perma bear, right? If you're a perma bear in these markets, which not very many people are, but you see the crap on Twitter, you see the crap on online, and you subscribe and click on like the most terrifying headlines ever. Bears are wrong most of the time. Okay. And to tell you like it's coming. Eventually something happens. They're like, I told you so. But what happened for the last 2, 3, 4 years that the market kept going higher? So you can't convince me that being a bear is the right way to trade. If anything, it's like bears are only happy when the market's down and they're always pissed when the market's up. But what does the market do most of the time? What has the market done for 90 years? What's the market done for 50 years? What's the market done for 70 years? What's the market done for the last 20 years, last 30 years? It's up most of the time. It's going to all-time highs. So a bear it's the wrong animal in the markets. You want to lift animal spirits. You're not lifting bearish spirits. You're lifting bullish spirits, and this market is loving some risk appetite right now. So any dips, I think we get dips that are bought. If you think about it too, it's like, I know that the stock market isn't the reflection of the real economy. Okay. And get over the fact that you think they're intertwined. They're not. The stock market is its own thing, right? It's a representation of our country's financial markets and, financial domination, essentially. The whole world is overweight US. But if the US can't see a market that goes higher and higher and higher, very few alternatives will go higher. So if the US market is stable, it can be outperformed by other stuff. But if the US markets are down, I hate to say it, most other markets are coming down with us. So as they say, if the US catches a cold, the world catches the flu. And so I think right now Whether you want to say that, oh my, the whole world's overweight US, they need to diversify and they need to be, yeah, but if the US goes down, everybody's going down with us. You saw that literally this year in April. That was a systemic move in the markets. We were down 15%. The whole market was around 20, 25%. It was a nasty systemic risk. Okay. So the reflexivity of the markets bouncing back up. Now the US is up 10+% year to date. Yes, they're underperforming Europe and they're underperforming the UK and they're underperforming India and China and some other emerging market countries and ETFs. But if it wasn't for the stability of the US markets, those would never have bounced back. Okay. So I think the whole world needs to cheer on the US in a way. If you want to see higher highs across the globe, you need to see the US be pretty resilient. And I think right now, like it is very much a pro-growth, grow at all costs. Right now, like it seems like CapEx spending is spend at all costs. This is an AI arms race. This is the race for the future. And I don't think it's like smart to just dump billions and hundreds of billions of dollars into like hope and optimism of the future earnings. But maybe it's what we have to do, right? Like if we want to dominate on all fronts, we've been kind of saying like, well, the U.S. secretly gave away its manufacturing markets to China, and China's done this and is playing the long game for 20, 30 years. That's great. But if the U.S. is going to pivot for the first time and actually focus on something like, hey, China's been doing this like behind the scenes for 10, 15, 20 years. If the U.S. even makes an attempt to try to catch on to that trend, I still think globally the U.S. can do it. I think the U.S. can catch up in some way, shape, or form. And I think if you're looking for a country that's still going to be the best country to get behind, it'd be hard to argue against the U.S. in these next, 2, 3 years, 5 years, 10 years, who knows? My biggest fear with the U.S. is that our 2-year and 4-year political cycles just become such a circus and a mess that all we do is eat ourselves alive from the inside, and something bad happens to us internally. But it's like we have the biggest advantage in the world with the financial markets. We do. Just don't break them. Just don't do anything stupid. And that's why this year's been like so noisy, So I'm trying to sift through the noise like I think you should, because it's a lot of it. Every day you're going to hear something. Every day there's this. I mean, literally today I start my daily profit plan room and somebody today is like, what about this Trump and Zelensky and Putin meeting? I'm like, well, they met in Alaska over the weekend. What's going to disrupt it for Monday? What has the market done today? Freaking nothing, man. Like this market did squat today. So every day when you're looking at these markets, stuff that you think is out there, it's priced in. This is efficient market theory. Very rarely is the market caught off guard. And if it is, it's caught off guard. And then the systems, the breakers, the guardrails, everything that just creates so much efficiency picks it back up and puts it back in line. There's a reason that market makers are the probably most sophisticated, like entities out there where they keep markets pretty much in check. That's the guardrails. So anyway, waterfall income seems like a great place for me to start. I also want the pinch point scanner. Okay, cool. Yeah, all good, man. If you have any questions, so here, check this out. Any questions on that stuff, you can come into here. So I've got a website up and running now, chrispulvertrading.com. I'll click on that just to show you what it looks like. So give some insight and information. So if you want to come into my daily profit room, you can join me every day, Monday through Friday at 9 a.m. Eastern time. It's right here. Click on daily profit room at the top. Join me here. You can sign up. You can join my Telegram. You can join my Discord. Also, if you ever have any questions on any of these services, you just want more information, want to talk price, you can email the team at Prosperity Pub, support@prosperitypub.com. Or you can ask me. You can hit me up on Discord. You can find me here every single day. So just ask me. If you want to send me an email, that's fine. I'll reply whatever you want. Cool. All right. We've got about 15 minutes left. I do want to talk about the iron fly strategy. We're sitting here at 64.49. I'm going to go ahead and get this thing organized. You're going to see a lot of SPX trades here, so bear with me. SPX trade, put these in order. SPX trade. These are all my trades from today. I have, let's start with this one. 50, 50, 55, and 45. So 50. So that's a sell put. That's a sell call here and here. So this is an iron fly. This one's going to be showing the most promise right now. This is up $500. Okay. Not too bad. Is that right? So I've got the 650 put, 640. Oh, I did this. Hang on. Nope, that's not right. Let me ungroup this. I was tempted for a second to like, what the heck? I just doubled my. No, it's not right. I've got to go 50 call, 50 put, and then a 45 put. This one and this one. So it should be these four. This one should be filled for 250. Or actually 425. This should be a 425 fill. Iron fly. There we go. So 425 fill, it's up $80. This one has the potential to pay me $425 at the end of the day if we're sitting right around 64.50. Okay, so there's that one. And then I have the 30-30. So I'll go sell the put at 30, sell the call at 30. I've got to buy the put at 25 and buy the call at 35. This one. This should be another iron fly. Then I have this one for the 65 and 65. This one's probably the most worthless, but there is my 65, 65. So let me find that other one. So I've got the sell call, buy call. Where'd my 70 go? This one. Okay, I'm gonna ungroup this one. So I have the 65, 65. So sell put at 65, sell call at 65, buy the 70, buy the 60. Here's another iron fly. Okay, almost done. This one's a 20-20. So sell the put, sell the call, 25 is a buy, 15 is a buy. This is another iron fly. Okay, and then lastly should be these final four at 40. Sell the put, sell the call, buy the put, iron fly. Okay, so collectively on these trades, this trade is down $25. That's 40. It's probably going to be, this will be a worthless trade with a risk of $50. So in this one, I can lose $50 to make 450. This one, I'm risking 20 to make 480. That one's going to be lost because I don't think we're coming to 64.20 here in 13 minutes. So most likely, this one is going to be down minus 20. This one's going to be down minus 50. This one at 65, we're only down a couple bucks on this one. We're trading at 52 right now. So my best hope for a pin today is going to be not this, probably this one. This is probably my best chance for a pin. 50-50 is my pin, and then I have the 65. So either this one or this one for a pin today. And this one's probably the more realistic one if we just hang around this gamma level. We're at 51.91. If we close right now, okay, so I have technically I have $5. $5 minus $1. We're trading at 651.04, so roughly $1. So this trade would pay me $400. If we were to close right now, it'd pay me like $450. Okay, cool. Like that's about as good as I can do. So I know, we're coming into the end of the day, if we're right here in the middle of any of these boxes, so middle of this box, middle of this box, middle of this box, obviously the lower ones look lower probability, but any in the middle, I have a pin price in the middle and I have 5 wide wings. The butterfly trade looks like this. The iron butterfly is I sell. Okay, and I talked about this last week in my my double ups class. Sell the body of the butterfly. Okay, so if I think price can pin late in the day or at close around a certain price, then I sell options at that price. So the trade that's closest to paying me right now is going to be this trade. I sell the 6450 call, and then I sell the 6450 put, and then I'm going to create a spread on each side of that. So I buy on the call side 6455 call, so it's 5 wide, and I buy this 6445 put. this trade was about $4.50 credit, which means my max risk is $5 minus 450 equals 50 cents risk. That's the most I can risk on this trade. Okay. So does it mean it's a great setup every single day? No, it's not, because this is a trade that I'm trying to basically keep price at a certain pin level. I want to keep price at 64.50 today. If price is going to close here in 10 minutes around 64.50, that's perfect. And that's great for me. That's also just very difficult to do every single day. So why did I take the trade today? Because it was a pretty choppy day, pretty calm day, but 50 was one of my biggest gamma levels, my biggest liquidity level for the day. So if we just hang out around 50 or 49 or 50 or 51, I'm going to get $300 to $400 profit on that trade. Okay. So for every dollar, like we'll see what happens. Like literally when we close today, I'll see where this thing cash settles. But hopefully what I end up seeing is prices either at 40, so down near the intraday lows today, or prices at 50. For my best chance of profit right now, I probably want to see price stay around 50 or 40 for the end of the day. Okay. The trade itself, when you take an iron fly, the trade looks like this. What I'll do is I'll build this out. Let me show you the positions here on option strat. Option strat. I'll show you the positions here. This is going to be in the next few minutes. So we got 9 minutes to close. So see if this will let me build it out the way I want. So I'm going to go iron butterfly. And this one is a SPX trade. Oops, let me go SPX. So I got the pin at 50.50, and I went on the call side 5 wide, and I went on the put side 5 wide. So this is my trade, which right now, based on current price, which is around 64.40, 64.49.36, I'm right there around that pin price. That's pretty good. And let's go to, where the heck did it go? There we go. So that's one trade. And if I get the pin at 40, I'm going to add in another buy call. I'm going to add in a sell call. I'll add in a buy put. I'll add in a sell put. So this one I've got pinned at 40. It's going to get a little messy here for a second, but just bear with me. So I sell the call and put at 40, and then I buy the 45 and I sell, or I'm buy the 35 there. So that's kind of my little profit trap for the day. This is current price. So price is right around here at 50. Okay, price is right around 50. This is only 7 minutes away. Okay, so right now, for the final couple of minutes here, let's go now to the close. We just have a couple of minutes left. I mean, this thing, there we go. Oh, I need to go this. There we go. Okay, so we've got 7 minutes. This is what's kind of cool about this trade. In the next 7 minutes, this trade offers up max profit. So right now, I've got some partial profit showing at the 50, okay? But in the next 7 minutes, which obviously isn't that much to wait, the next 7 minutes, this trade potentially has full profit potential if I can keep it in the profit trap. So the profit trap is, for me, the way I pinned this thing today, 64.50. Okay, this pin is 64.40. Now, the reason I chose that is because there is a $5 wide profit trap here, and there's a $5 wide profit trap here. So if we're at 51, 52, 53, 54, 55, I have a break even there. If we're at 49, 48, 47, 46, 45, I have a break even there. So this potentially pays out $1, 2, 3, 4, $500, 400, 300, 200, 100, and I'm break even on the sides. That makes sense? Same thing on the 40s, 41, 2, 3, 45, 44, 43, 42, 41, and 40, and then 39, 38, 37, 36, 35. So potentially a $5 profit trap up here. We're trading at 53 right now. You son of a gun. This thing's going to switch to freaking 55. Don't do that on me, a-holes. I'm watching this thing float in real time. Don't pin at 55. Go down to 50. All right, 5 minutes left. Go down to 50. Let me see what this thing's offering. So this 50 pin is up about $100. There we go. All right, let me see if I can get this thing closed out. And I mean, this might be better just cash settle. We're trading at 52 right now, 53 right now. I'd like to see this thing get as close to 64.50 as possible for the close. So I'm going to keep an eye on this one. Ideally, this one goes to essentially like 0. So let me see if I can put like I don't know. I might get really lucky here and try to put $1 in. Let's try $1. See if I get lucky on the trade. So that would give me $350 on the trade. Okay, so we have 4 minutes left. The closer this thing can settle, right at 50 would be great. So ideally, 64.50 would be perfect. If we're at 55, honestly, I might risk the 40, $50 on the trade today, which is kind of annoying considering I've got this thing surrounded, and yet this is how tricky it can be. Okay, I've got it surrounded, but notice how I said in the middle of these strikes, right? The middle of the strikes. Let me change the color here. So if I go middle, 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 that's ideal. So for up here, this is like the only weakness that I have in my positioning. So there'd be no bonus trap. Okay. So we'll see. We'll see what happens. Hopefully we're going to settle in around 50. I've got 3 minutes left. I'd be loving this thing at 50 for the day. Okay, so I'm just gonna ride this thing out, cash settle. If it's up into this white space, then I'm risking $125. I've already made about 250 on the day, so I'm still netting profit. But ideally, this thing gets to 50, and I'm pinning this thing for probably a couple $100 bonus trap. But a lot can happen here. Literally in the last 3 minutes, a lot can happen. This is where we're at. We've just got the last couple of minutes, so we're at 57 right now. Okay. So you can see how much potential profit is like not realized yet. Just these final 3 minutes, the way this thing can settle, a lot can happen in 3 minutes for profit potential, right? Like I could be up $100 and some right now. That's cool, but $100 and some compared to like $500 is a big difference. So I'm just gonna, I don't know. I mean, unless this thing is offering me a big fat profit, which right now it's only up about $1, maybe 40 or so. Right now, this trade is up about $125, $150. So if I see this thing climb over 200, I might just take the profit. It's getting closer. 51.97, 95, that's good. See, maybe I'll watch. Okay, we're at 51.80 right now. 51.80. I'd love to see this thing get down to like 51.00 into the 64.50s again. I did these all this afternoon. These were just sprinkled in trades. It was kind of in the spirit of my double ups last week. We talked about them. If one of these pins, then I'm going to send a video out for my double up alerts because we did talk about it last week, but we focused primarily on directional butterflies. This is one that I do sprinkle in throughout the week. These trades are all taken later in the day, though. This is 11:47, 11:47, 11:49, 12 p.m., 12:30. These trades are all in the afternoon. There we go. Now I've got this trade up about $260. It's getting a little bit better. 250. See if I can close this thing down. $1.50. That's a good win. See if I can get out of here for $1.35. It's pretty slippery here the final minute, but we're at 49.11. I mean, honestly, maybe I get super lucky on this thing. Let's go $1.20, $1.10. Wow, baby, that's close. 6449.24. I think it just made about $400 on the trade. So up 359. Cool. Right now, it looks like cash settled at 6449.16. So that would be my $5 trap minus 86 cents. So that should be a $414 cash settled profit. That's not bad. That's not bad at all. Yep. So I've got 6449.16. If that's going to settle in tasty, then I should get about a $400 profit on that trade. Now, I was risking in full. This trade was risking. I do have risk on the trades. I obviously put a bunch of trades in here. So I was risking 75. I was risking 35. I was risking 35, and I was risking 20. And I was risking 50. So I was risking a total of $2.15, but I just walked away with over $400. That's not bad. Do I always do this every single day? No freaking way. Because most of the time, price is not this still and chill going into the close. So it was kind of an opportunistic trade. Like I said, I talked about this last week in my double ups. I'm happy to send a video out just to say, hey, look, if you want to have on the masterclass in this one, we did a lot of directional butterfly trades last week in class. Let's talk about the directionally neutral pin prices on an iron fly. It's awesome when it works out. I kind of like layering in my trades where it's like, yeah, I'm willing to risk a couple dollars for all these trades, right? So I was risking. I mean, this is like pretty good. We're at 49.15, 49.16. That's pretty good. So by the end of today, this should have cash settled for about a $414 winner. I'll certainly take that. And then by tomorrow, I'll verify it. We can show it in the broker history, and you'll see that it was probably like a minus net fees and everything. It's probably close to like $400. Okay. So overall, I'll take it. All right. So the iron fly, this is where we are at for option strat right here. So we have close, and we settled at 49. So that means my little vertical line, if you have a white color, my vertical line to be right here around 49. So the way this trade pays me is that's my profit trap, right? This is where we settled around 6449.16, and that's in the upper part of my profit trap. The perfect trade would have been 64.50 right at the close, which obviously is difficult to do, right? But because it was within a dollar, like that's pretty darn good. I'll take a profit trap like that any day. Okay. So it's fun, but there's risk, right? I mean, there's a dead zone in here. There's obviously risk above and below, and I had this thing kind of sprinkled in all over the place. So I had risk above, and I had some more, trades below. So this would have been helpful, but honestly, how to get the trading plan for the day, it was right here on my software. 64.50 was my biggest level. Maybe we had a positive negative gamma flip at 64.30. I figured between that 50, 40, and 30 zone, price probably closes in there today, which it did. So anyway, I'm happy. That's fine. I'll take the little $400 winner, and we'll go enjoy the day. So, all right, if you're interested in a trade like that, like I said, that's my double up service. We had a great masterclass on that last week. I'll send a video. I'm going to send a video of my double ups this week. We'll talk about it, and I'll probably do like a 20, 30-minute video on it. I just want to give traders the tools and resources to know, like, there's a couple of really great strategies within double ups that if you're paying attention to index trading, man, you can make some high reward, low risk trades, and you can place a couple trades a week easy. So that's what we did last week, and we had some nice winners. We had like 150% winner, we had a 200% winner, we had a 250% winner. Those all like lined up last week on Friday. And then a trade like today, it's like, I had I guess from the risk that I was taking on that trade, I was risking about $50 and I made 400. So, I mean, 400 was my max profit and 50 was my risk. I mean, I just made 800% on that trade. Like, I will take that any day of the week. So there is my 50 and there's my 412 P&L, right? You can see right there. So 412%. Not bad. Cool. All right. Let me do this. Technical Tuesday. We'll come back tomorrow and grind through the daily profit plan. That's tomorrow morning at 9 a.m. If anybody would like to join me, you're all welcome. Just go to chrispulvertrading.com daily profit room. I'll just type the link in here, chrispulvertrading.com. chrispulvertrading.com. If you'd like to join my Telegram, if you'd like to opt in to join my sessions every single morning, give me 1 second here. So SMS There we go. This is daily profit plan, 9 a.m. Eastern time, Monday through Friday. There's a link for that. My Telegram. This is for everyone to follow me. Telegram here. Copy that. Chris Pulver Telegram. There you go. Thanks for that, Adrian. Yeah, a little smash the like button helps along a lot. We talked about that last week. It's like literally anytime you're watching stuff on YouTube, if you like the creator, like the content, that little thumbs up button for half a second, just push the button. That is probably the best way to help, me with the algorithm and get my channel seen for more people. So look, I don't know how many people do it and do it like with real trading, do it with live trading and do this for free. Maybe tons of people do, but probably not. In all honesty, the stuff I soak in and digest on YouTube is mostly long form podcasts. It's mostly financial. I mean, I barely listen to music anymore, which is annoying, but I just listen to financial podcasts to make sure that I'm well informed coming into sessions like this. So I just know what the heck I'm talking about. I'm commentary neutral. I'm not political. I'm a centrist. I just want to trade the markets. I want to trade the markets and ignore a bunch of noise. Sometimes I get annoyed and frustrated like you should. Like markets have a lot of stuff that you don't know. Like you're trading risk and you trade uncertainties. You got to be courageous when things are crazy and messy and wild. You also have to know when to be patient, disciplined, and not overreach and not overstretch. And it's just you're constantly kind of balancing that emotion to sentiment and good trades. But I think at the end of the day, if we can have good trades, we can manage risk. It's pretty easy to make money. I'm not talking about buying an IPO and trying to flip your account hundreds of percent. I'm talking about steady, 1% a week, 0.5% a week, 0.25% a week, not losing your butt when the market goes down 5 or 10%. Being aware of when corrections can likely happen. I don't know the why, I don't know the when, I don't know the how, but something tells me we're going to be correcting off this 6,500 should be a pretty solid resistance level this week. If we drift a little bit higher, we're probably going to fade off that next week. We do have NVIDIA earnings. Jackson Hole could be interesting. I don't know if it's going to be a big disruptor or big pile of noise, but that's on Thursday, Friday after FOMC minutes on Wednesday. So what was one interesting spot from this week's today's analysis is that the probabilities changed quite a bit on the Fed Watch tool. Okay, this was a 94% chance the Fed was going to cut. Now we have an 83% chance and a potential pause on the horizon, which is crazy. Like literally last week, this is like 94% Fed's going to cut. No ifs, ands, or buts. They probably will still cut. But now the market's like, are they going to cut 25 basis points? Are they going to cut it all? Are they going to wait till October, December? I do know that Donald Trump would likely be extremely vocal if the Fed does not cut in September. And I do think if they do not cut in September, look, I don't want to see 50 basis points. I really don't. I think it would be irresponsible and probably more of a shock to the market to cut by 50 basis points because that's going to show the markets that the Fed is more nervous and scared about forward guidance. Instead of, look, we'll cut by 25, we'll be data dependent. But if we cut by 25 and things look good, we'll cut another 25, we'll cut another 25. I don't know. I think the market can take that in stride. But if we throw out 50 basis points and all of a sudden we see, inflation spike up again, and then they're like, well, crap, we kind of cut too much. We need to backpedal and maybe pause. It's like, I just don't want the Fed to have to do anything that's like you cut and then you backpedal and raise, or you don't cut enough and you cut once and then pause and then you have to cut more later. It's like, I don't know, just cut 25 basis points, let the market take it in stride, don't shock the market. And that's also the mandate is price stability. So I don't see why the Fed would be this crazy disruptive, this disruptive power out there when really, if they don't cut, guess who's going to speak up? Our president. Donald Trump would be like truth socialing his face off to yell at Jerome Powell. Whether it matters or not, it's going to be a bunch of noise. That when he said that he was considering firing Powell and the market sold off almost 1% in 30 minutes, yeah, there's going to be some noise to navigate. So anyway, all this is in the next 3-4 weeks. So I think if we just stay the course, remember, most of Europe's on vacation, markets are pretty thin, lower volume, lower liquidity. Just be aware for some shenanigans, right? Lee says he absolutely can. Lee says, can he get more vocal? He absolutely can. So I wouldn't bet against that guy as far as being more vocal and being seen more. So if you take golf away from him, he'll probably be on tweet. He'll be on us, True Social and Twitter every minute. So anyway, all right, I'll let you go for today. Overall, good stuff. Got lucky with that pin price. That worked out pretty well. And we'll come back and tackle this again tomorrow. Tomorrow morning, 9 a.m. Eastern Time, daily profit plan. All are welcome to join. It's free for everybody. Jump in. The alerts, obviously, like I trade with members. If you're in my services, I post those alerts in Telegram and the trackers. So tomorrow's Technical Tuesday. We don't really have a lot of news, but we grind here. This week, I'm doing a waterfall income. We had the trade session today. We're doing a 3-day workshop in masterclass waterfall income Tuesday, Wednesday, Thursday. So if you'd like to be a part of that, it's a great time to jump in because we're spending lots of time together this week to digest the core strategies, make sure you get the tools, resources, and education to be successful. I'll also sprinkle in a video for my Double Up members for what I just did today. Pinch point scanner, we'll look at that on Wednesday. Newsbreakers, we have some earnings this week. We've got Palo Alto, Home Depot, Lowe's, Toll Brothers, Target, Walmart, Zoom, Baidu. I'll price them out. I'll see if they're worth maybe placing a trade. We're at the tail end of earnings for this quarter. So I want to make sure if I do place a trade, it's going to be very low risk. Okay. So a little something for everybody. But if you want to join me tomorrow, 9 a.m. Eastern Time. I'll see you then. All right. Thanks. Have a good day. Bye.